Hello traders, this is a daily forecast on gold. Today is Friday, September 3rd. Today is the day of the NFP report. It's a very important economic release that will influence all financial markets. This video is brought to you by Finteria Markets. Please check our website for more information about the company. As usually, I'm going to start with winners and losers. We do not have gold included in this service. However, we can see the strength and the weakness of the US dollar. First of all, over the last 24 hours, we can see that the US dollar lost 0.34%. And we can also see the broad-based weakness of the US dollar on the weekly chart. So it lost 1%. It's currently one of the weakest currencies in the market. So today we're expecting the non-farm employment report. I discussed this report in details in my video on Eurodollar. So please check that video. I also provided some explanations and some trading recommendations related to the numbers we can expect today. So right now I would like to talk more about the technical levels on gold. I'm going to start first with a daily chart. First of all, we can see that we're trading in a white triangle. We have a strong resistance level at 1834. If we check the 4-hour chart, we can see that the upside movement is limited by this upward channel. We're currently sitting at the middle, and we have another triangle formation. Well, it can be quite surprising because we didn't have a strong movement on gold in comparison to other currencies. So we had a broad weakness of the US dollar, but it was not reflected in gold. Gold looks pretty stable in comparison to the US dollar. And in terms of other currencies, like it fell against the euro, against other currencies, including the commodity currencies. And this is pretty surprising for the market, for many economists who are questioning why this is happening. So it's pretty surprising to see that the gold volatility is very limited. So in my opinion, we need to watch technical levels very carefully. So in case of the breakout of this triangle, we have a potential to go up to 1834. So volatility can increase. And we can also watch out carefully the lower band of this channel in case of the breakout. In case of the breakout of the triangle, we can also see the downward movement. So in my opinion, both directions are equally possible. There's also one chart that I would like to show you. Maybe it can explain why we do not have any rally in gold, taking into account the inflation numbers, because the inflation is soaring everywhere in the world, including the US and including the European countries, basically including the commodity prices. So I would suggest to use the tradingview.com and add the following charts. I'm gonna start actually from the scratch. I will remove all the charts that I have. So as you know, gold really depends on inflation numbers. So you can pull up the chart of gold, and then you can add the following inflation indicators. First of all, you can add 5-year break-even inflation rate. So that shows the inflation expectations over the next 5 years. In addition to this, you can add one more indicator, which is called 5-year forward inflation expectation rate. So it shows 5-year inflation after 5 years. So it's sort of a good indication of the long-term inflation numbers. I'm going to put both charts in the same window so we can track them, and I'm going to move them to the same scale so that we see them relative to each other. And at the same time, I'm going to add another indicator. It's actually not an indicator, but it's an iShares TIPS bond ETF. So that can be very useful. I'm going to add it, and I'm going to use a different scale for that. I'm going to move it to, okay, I'm going to leave it like this. So as you can see, there's a really high correlation between TIP and gold. TIP is actually includes government, inflation protected government bonds, and you can see almost perfect correlation between gold and TIPS. So I would like to explain what was happening after pandemic. First of all, when the COVID situation occurred, we had a large decrease in the inflation expectations. The inflation expectations for the 5 years decreased up to 0.38, and then they actually recovered. And as you can see, the gold price has also decreased substantially. And when the inflation expectations return back to pre-COVID levels, pre-pandemic levels, at the same time, you can see that the price of gold soared really substantially. And I think that was a really strong rally, and probably the gold overshoot. It went just too far. And even right now, we can see that the inflation expectations are pretty constrained. We're sitting at the level, well, the inflation expectations for 5 years are sitting at 2.48%. It's lower than the current CPI value, so it's lower than the current inflation. And apparently the Fed is doing a great job at talking to the markets and saying that the inflation is transitory. And currently the market really believes that the inflation is transitory. At the same time, we can see that the ETF continues to rise, but the gold is not following the price of TIPS. I think this is because we had a really strong trend at the end of 2020. So the price of gold was just too expensive. It's still pretty expensive in comparison to the market. So maybe that's the explanation that we do not see any rally in gold. So what I suggest you to do, I suggest you keep monitoring the inflation expectations, and also you can monitor TIP on tradingview.com. And at the same time, you keep watching the technical levels. So in case of the breakout of the triangle and of the daily resistance level that we have, 1834, we probably will have a new rally in gold. So in case if the price reaction doesn't confirm those movements, probably we're still gonna consolidate even further, or we can actually see a further correction in the gold prices. So that's my analysis, including the analysis of the fundamentals and inflation numbers. I hope you like this video. Please leave your comments and questions if you have any. This video is created by Finteria Markets. Please subscribe to the channel and visit our website to learn more about our company. Thank you for watching.